If you're anything like me, then when you think of what banking is like today, your mind goes to things like online banking, mobile apps, digital wallets, and ATMs. These services have become so ingrained into our everyday lives that it is hard to imagine life without them. But believe it or not, we are still in the very, very early stages of this digital revolution. We've only just scratched the surface. This is especially true when you start looking at how digital transformation has impacted the ultra-wealthy. You see, while the rest of us are still trying to get used to using our mobile phones to pay for groceries and other everyday purchases, the world's super rich have long since moved on to even more sophisticated methods. They re-ditching their old bank accounts and transferring their money to a new kind of financial institution called a digital private bank. And they redoing this because these new banks can offer them something that traditional institutions simply cannot: complete privacy. But if there's one thing that ultra-rich people have a lot of, it's options. So why are they giving up all of those alternatives and going all in with these new digital banks? Well, let's find out. This is the story of how the next generation of the ultra-rich manage their wealth. In an era where technology has made everything instantly accessible and automated, it's no surprise that the way we bank has also undergone a significant transformation. Online banking and mobile apps have become the norm, allowing us to check our balances and transfer funds with just a few taps on our smartphones. However, while these technological advancements have revolutionized the banking industry and brought convenience to everyday consumers like you and me, they have simultaneously created a major blind spot for the super rich. You see, while online and mobile banking have made transactions easier, they also make it possible to track every single dollar that passes through someone's account. And for some people, that's not exactly ideal. And this is especially true for business magnates, celebrities, and politicians who regularly make headlines and whose financial activities often become public knowledge, while the average person may not think twice about the occasional news article revealing a hefty purchase or a large sum transferred to a friend or family member. Constant exposure of such transactions can be a major problem for high-profile individuals. For starters, such exposure can lead to increased scam attempts and fraudulent activities targeted towards these high-value individuals. Once their names hit the headlines and their net worth becomes common knowledge, they become sitting ducks for scammers, who will stop at nothing to separate them from their fortunes. It doesn't take a genius to know that someone worth tens or even hundreds of millions of dollars is much more likely to fall for a scam than the average Joe, who might be suspicious of any email claiming to be from his bank manager asking for his password. But it's not just the risk of scams and fraud that wealthy individuals face. Constant exposure of their financial activities can also lead to unwanted attention from envious individuals or even jealous competitors. For instance, imagine being a CEO of a major corporation and having your every move tracked and analyzed by competitors eager to gain any advantage over you. Or picture yourself as a celebrity with every purchase splashed across tabloids, losing your privacy and peace of mind. And let's not forget about the potential security risks involved. When high-profile individuals move around large sums of money, they often become targets of criminals looking to steal their cash, or worse, kidnap them for ransom. In such situations, having their financial records exposed can put them and their loved ones in danger. So it's no wonder that many wealthy individuals are seeking refuge in digital private banking, a new breed of financial institutions that puts privacy and discretion first. These banks understand the unique needs of high-net-worth individuals and offer them customized solutions to protect their money and keep their financial activities out of the public eye. But why is it that only the 1% can afford these services? What makes digital private banking so different from traditional banking, that the rich are ditching Goldman Sachs and JP Morgan for it? Well, it's all about data protection. You see, the rise of digital banking has undoubtedly made our lives easier. Traditional banks now have access to a goldmine of customer data, which they use to develop detailed profiles of our spending habits and financial behaviors. This information is not only valuable for banks, as it allows them to offer tailored financial products and services based on our needs, but it also holds immense value for advertisers and data brokers, who are always looking to capitalize on our personal information, leading to a deluge of spam calls, emails, and other forms of unwanted communication. Not to mention that in the wrong hands, this information could be used for identity theft or other malicious purposes. For instance, if someone gains access to your bank account details, racking up debt and ruining your credit score before you even realize what's happened. And it's not just individual customers whose data is being exposed. Companies are also vulnerable to data breaches that can result in the theft of sensitive financial information. In fact, according to a recent study, 43% of companies worldwide have experienced a data breach in the last 12 months, with financial institutions being one of the most targeted sectors. Well, the answer lies in the hands of digital private banks. Unlike traditional financial institutions, these banks don't rely on collecting customer data to drive their business. Instead, they prioritize privacy and offer their clients the option to remain anonymous. You can safeguard your financial information and enjoy peace of mind knowing that your bank, won't be selling your data to the highest bidder. One of the most appealing aspects of digital private banking is the level of customization that these banks offer. Unlike traditional banks with standardized services for all customers, digital private banks tailor their offerings to meet the unique needs of each client. For instance, some digital private banks allow their customers to create multiple accounts with different spending limits and transaction types. Take, for example, Fireblocks, a digital private banking platform founded in 2020 by Israeli cybersecurity expert Aidan Ofer. Fireblocks offers its clients the ultimate in privacy and security, allowing them to hold assets and make transfers without revealing their identity to the bank or anyone else. This level of discretion provides peace of mind for those who value their privacy and want to keep their financial activities away from prying eyes. So if you're tired of living in a world where every purchase and transaction is tracked and monitored, it might be time to consider switching to a digital private bank. With the increasing value placed on data privacy and security, these banks offer a refreshing change of pace and a welcome alternative to traditional financial institutions. It's gaining traction among tech-savvy individuals who are looking for more control over their financial data. As more people become aware of the benefits of digital private banking, we may see traditional banks adopting similar practices to stay competitive and retain their customers. However, for those who value their privacy and want to take back control of their financial data, digital private banks offer an attractive solution. The benefits go beyond just keeping your information out of the hands of data brokers and advertisers. It is also about having peace of mind, knowing that your financial information is secure and your transactions are private. So if you're ready to take the leap and explore the world of digital private banking, you should probably start soon. That's because, as word gets out about the benefits of this new type of banking, more and more people are likely to follow suit and switch over. And as the demand for digital private banking increases, you'll have plenty of options to choose from when it comes to finding a digital private bank that meets your needs. But for now, the early bird gets the worm. So if you're interested in exploring this new type of banking, I encourage you to do your research and start shopping around. You never know what kind of benefits and perks you might find. And hey, if you're already sold on the idea of digital private banking, go ahead and make the switch. Your wallet will thank you for it. So, what do you guys think? Would you ever consider using a digital private bank? Let me know in the comments below. And if you enjoyed this video, please give it a thumbs up and subscribe for more videos about money. Thanks for watching.